hot damn. Good. Let me just fluff up my cafe real quick. Sweet. Hey, so let's get to work, guys. Look, we got a little gap up in the markets. Obviously, the market got dusted yesterday. It could have just been a one-day thing. You know, if you really think about, if you think about the depths of how far we've come, right? You know, 25 points on the QQQs, falling 3-4 points, not necessarily the end of the world, but we do have to be careful. What you always want to look for is on, you know, shorter time frames to see if there's like rollover type patterns, right? So like on your hourly chart, if you start to see a pop, but it starts to roll over, right? You could have like a short-term kind of head and shoulders pattern on your hourly that may say, hey, we're going to have a few days of downside. You know, to bet on, you know, the market coming back all the way down is probably going to be a little bit tricky. I mean, we've just come a long way. This is 34 points, and, you know, we retraced 5 points of it, right? So what's the big deal kind of in the scheme of things? Yesterday could have just been a one-off thing. But I'll tell you what, it was volatile and it was nasty yesterday. The range is on certain stocks, and so you do have to respect that and understand that, you know, even though it looks like we're opening up higher, it doesn't necessarily mean we just explode out of the gate. We really need to do during these type of times is kind of wait it out about 5, 10, 15 minutes at the market open, kind of see which way the market wants to go. Remember that the market itself is just, right? I mean, you treat it almost like a stock. You know, like yesterday, you'll see like see how the market gapped down and then it just ORB'd, right? It built a range at the open and then it took down, right? It took down its opening range breakdown, right? The trend ended up setting, right? So it gapped and then the trend set, but you had to wait it out. If you took a guess, the first candle, you may get stuck in one of these wicks and thinking the market's going to pop up, and then you come back down. And so ideally, if we're, you know, able to, you know, just not be degenerates for, you know, 5, 10, 15 minutes, we'll be able to let the trend set and then really be on the attack, whether it is long or short. Frankly, it doesn't matter to me, right? I mean, longs are fun, and, you know, frankly, shorts are fun. So, as always, we'll let the trend set, and then we'll play what we got to play. On the gapper list, right? So, there's a decent amount of stocks that got earnings out today. They're all kind of B's or C's. Yesterday, you know, we had like SWK. There was like a whole host of stocks that were gapping out of earnings that were, I would say, like A- level. Today, I'm seeing more B's and C's due to the location of kind of where the gaps are on some of these stocks. Like this SYF is gapping up on earnings today, and it looks pretty good. But look, it's a bank stock. Bank stocks don't move that well. It's also under its 200 SMA, so technically we can't even long it for an opening range pattern unless it gets over the 200 SMA, right? We never want to long an opening range pattern if it's stuck under resistance on its daily chart. The second part is bank stocks suck to trade, right? Your granddaddies all probably trade bank stocks. Why? Because their hands move slow and they have glaucoma. They have to trade that. For us, we've got other things we can trade. So let's try to, this is like a B-. This QSER is coming out of range 2 on earnings. It's already got a decent pre-market range. It is clearing more levels, but it's a restaurant stock. Restaurant stocks suck to trade too. After bank stocks, restaurants are like the second worst to trade, right? Nobody ever made money ripping around Cheesecake Factory, right? Or Applebee's or whatever. So this is probably a B- too. It looks okay, but we'll watch it. It's just not ideal for me. You know, I'd rather, I need to get in something hotter, right? We need to get in something hotter. So these are stocks that we'll be watching, but not necessarily a priority. This cough, Capital One, gapping down on earnings. Also, it's also getting some downgrades. So kind of, right, people are starting to pile onto it. Now, this is a big company, and it's a bank. It's cleaner than SWF to the short side, but it's a bank. We'll keep an eye on it. Nothing that crazy. Main watches for today. This TVIX. It's gapping down over here. We'll watch and see if it goes red to green. We don't know, right? We have to let the market range set. Remember that TVIX bets against the market. And also, it's just got an incredibly crazy range. You know, the range on it was like $8 yesterday. So don't get wild on it. Trade like 100 shares, 200 shares, right? Our risk management and money management is always the key to everything that we do. You know, you should still be able to, if you're trading them right, be able to lift good gains by just trading small and, you know, being safe and letting the range take care of itself. Second one, number 2 is this CGC. We've got a kind of a level here at 45 that it's been holding on to. Man, I'll tell you what, the one thing about CGC lately has also been, it's been a clean trader. Like, it works really well off VWAPs and stuff like that. You know, obviously, if you go on our channel or on the Bulls on Wall Street website, you see a million VWAP videos and stuff like that. And usually VWAP's more of kind of an institutional thing, but it really works well off the VWAP, almost like those big dips when you think it's done. It'll come back and just rip right off the VWAP. So watch this thing, but it's a clean mover out of all the kind of stocks we've been trading the last few weeks, and I hate pot stocks in general, which you guys all probably know, but it's been the cleanest trader, I think, of the ones that we've been playing in the chat room, and also the one that's been giving us the most gains for day trades. So we definitely want to keep this. This will be number 2. Right, TVIX number 1. If it goes red to green, remember that if the market flies, this thing's just going to die, and there's nothing you can do with it. TVIX is even hard to short. Like, it's really hard to even get borrows on the thing. So, you know, we'll leave that one alone. If the market breaks out to the upside, we'll keep that one alone. We've got a whole host of kind of biotech stocks that we've been waiting for pullbacks on, like this Labu. You know, it had been grinding up really, really hard, but now we got a nice little pullback on it. If it can hold its range here at 45, it'll start to develop its flag, and I think that, you know, we should be able to get back to the top of the range pretty fast on it. This one's a good trader. It's got good movement on it. It's opening up strong today. Labu is one of those ETFs that will ORB to the upside, right? Remember what ORB is? It's a pop-up, 3 candles sideways, and then a go, or you let it pop up, you let it gap up at the open, pull back to the 9 EMA, you need a green candle to hold, and then you can take it back to the upside. If you guys are just new coming in, always remember on our channel we'll have a million videos on those 2 patterns, but those are our opening range type of patterns to do. Hey, Mike, good luck today, buddy. That's awesome. First day trading live. I'm proud of you, buddy. You know, your first day trading live, you always think is right the beginning, but man, you do have to do so much work before you get into that. So that's awesome. Congratulations, buddy. XS. So XS has got now 1 test, 2 tests, 3 tests of this kind of resistance level. If the market goes and stays, I do anticipate this one should have some juice on it. It's got a really nice range to it too. Watch this trend line break over there. CLVS is like another biotech stock. We're just watching this flag pattern that's been developing here. You know, it's a play on, you know, essentially moves with Labu. But you can see, like, you're kind of building out just a little box over here over its resistance line. If it can hold and break this trend line, I think you're going to have some nice action on it. It does have really good range. And frankly, if you can take out that trend line, you'll see it at, you know, 25, 26 relatively quickly. As always, right, these are day trades. We're just talking about day trading right now. When you do swing trading, you're looking at the daily chart, right? You're looking at the daily chart, and you're basing your ideas off the daily chart. When you're day trading, you are looking at your daily chart for ideas, for idea generation of what you should trade. but you're using your intraday chart, your 5-minute or 1-minute, whatever your tickle is, you're using that and applying an intraday pattern to it that matches what you're seeing on the daily, right? So if I like a stock to the long side on the daily, then what I'm doing is using an assortment of intraday patterns to match what I'm seeing, right? That's called time frame alignment. Aligning on multiple time frames is the most important thing that you can do as a trader. When you don't align on multiple time frames, what will happen is, right, they'll conflict with each other, and all of a sudden your day trade becomes a dud, right? A good chunk of even my students that don't listen to that end up failing because they just take day trades all day, but they're not thinking about the trades they should be getting into, right? They're just thinking about what's happening minute by minute. And as a trader, we have to think about big picture, little picture, and then marry them together. Keep an eye on this BBY. This is a retail stock, but it actually moves pretty good. You got this breakout on earnings, a pullback to the 9, right? So that's actually a really powerful pattern. When you get a breakout, pullback to the 9 and it holds, even when the market's in the midst of a dust-up like it was yesterday, that ends up being really, really well. Love that kind of action. Let's watch this one. I'm actually watching this one even for a swing trade. So that's it for today, guys. Always, and then, of course, we'll be on the hunt for news midday. You know, obviously, when you have, we'll have everybody in the chat room always looking at their tweeters and their scanners, and so we'll definitely find some news midday. As always, there's always some random hot stock moving around. If you guys like a little bit of a slower trade, do check out IBM and PG. They were showing up on the scanner in the morning. They're a little bit thicker float stock, which I don't like to trade, but frankly, you know, sometimes trading a little bit thick of a stock helps your results because it kind of slows you down, and there's nothing wrong with that, right? So, you know, just kind of be mindful of that. You know, you don't always have to trade the fastest stock, right? Sometimes we can just trade a stock and it turns out just fine. So let's get to work. Let's go do what we got to do. By the way, we have a webinar tonight. I believe it's 8 p.m. So you can go to the Bulls on Wall Street website. The links will be there. We'll throw out a good show and have ourselves a little fun. It's money time, guys. Let's go do what we do.